Picture two identical houses sitting side by side, right here in the shadow of Pilot Mountain. A sudden, fierce wind and hailstorm rolls through the Piedmont, causing severe, identical roof damage to both homes. Both owners file insurance claims. The owner of the first house receives a check to completely cover the roof repairs. But the owner of the second house? They get a letter stamped "Claim Denied." The owner of that second house had recently decided to rent the property out to a tenant, but they kept their standard homeowners insurance policy. In the world of property insurance, the physical damage to the wood and shingles matters less than the specific person sleeping inside the house. This diagram shows the foundational rule of a standard homeowners policy. The coverage remains active only as long as you, the owner, are the primary resident. The moment a non-owner moves in, that original policy voids. You now require a specific landlord policy. Insurance companies view renters as a distinct risk profile compared to owner-occupants, so they draw a strict line between the two. Failing to make this administrative switch is the most common mistake accidental landlords make, and it leaves the property entirely unprotected. Let's rewind the clock for that second house, and imagine the owner had a proper landlord policy active when the storm hit. The foundation of this policy is called dwelling coverage. This is the specific provision that pays to repair or rebuild the physical structure of the rental home. In the Piedmont region, this protects against your most likely local threats: heavy wind, hail damage, house fires, or a large pine tree crashing through the attic. When you invest in real estate, dwelling coverage ensures you preserve the physical asset that actually generates your wealth. But fixing a destroyed roof reveals a secondary consequence. The house is now temporarily unlivable. The tenant is forced to move out during the construction, which means those monthly rent checks stop arriving. Loss of rental income acts as a financial bridge, replacing the exact rent you lose when a tenant is forced out. If you rely on that income to pay the mortgage, the insurance company sends funds directly to maintain your cash flow. Dwelling coverage pays the contractors to fix the building. Income protection keeps your real estate business from going bankrupt while they work. Property damage isn't the only risk. Consider a freezing winter morning in Lowgap and a set of slick, icy wooden steps. If a tenant or their guest slips, sustains a serious injury, and blames the property conditions, they may decide to sue the owner for negligence. This is where liability protection takes over. It is the part of your policy that absorbs massive out-of-pocket costs, paying for the injured party's medical bills and your legal defense fees. A single lawsuit can demand hundreds of thousands of dollars. Liability coverage serves as the ultimate safety net, protecting your personal life savings from unpredictable legal claims. We've covered the outside of the property, but we also need to look at the interior, specifically at the tenant's daily life. This X-ray diagram shows a strict boundary. Landlord insurance does not cover the tenant's personal belongings, furniture, or electronics. To protect their items from theft or fire, the tenant must purchase an independent renter's insurance policy covering their property and liability. A secure rental agreement requires these two policies working in tandem to eliminate all coverage gaps. The moment the first tenant moves in, your property officially transitions from a personal home into a small business. Landlord insurance surrounds that business with three vital shields: structural repair, income replacement, and liability defense. With those shields in place, our second homeowner gets their roof fully restored, collects their missing rent, and gets their tenant moved back in, completely unbothered by the storm. Proper landlord insurance transforms a vulnerable rental into a secure investment for North Carolina property owners.